Everyone. Today is the 19th of February. This is Brad Matheny. We're looking at a very important day today. It's Wednesday. The markets, the SPY. I'm starting with this chart, and it's really come down to kind of a make or break day. You remember I highlighted this 1150, 61150 level about 3 or 4 days ago, knowing that we had this ultimate high level here in red, that we had to get above this level with some clarity, with some moderate strong close. I indicated this rectangle here would be our kind of our upper resistance zone, meaning that price could come up into this area, stall around, and roll back down. But I really kind of indicated here that we had to get, a strong close above 1150. We closed yesterday at 611.49. Okay, 1 penny below that level as a fairly strong breakaway close. And right now we're down to 610.74. Now, granted, we're not down a lot, but it sure looks like the markets are really struggling here. Now, a couple of other things I wanted to point out as we get into today. Okay, we've got very low volume. So look at where this volume level is here. Let me try to draw a horizontal line. And, we can go back. I'll drag it back down once we get over here. Okay, here's my horizontal line. You can see, I mean, we've got to go all the way back to December 3rd, maybe, right in this area. And prior to that, I mean, we don't have a whole lot of data. Once back here in July, uh, we really are moving into a very low volume kind of a move. And you can see here when we got into this volume area here, you know, got into this area, this was a topping setup over here. When we got back down into this area, fairly low volume right here, this was again a topping setup, pretty much right over there. When we got down into very low volume right over in this area, you can see that that was very near to a top, playing out. Now, I'm not saying that this is a top playing out. I'm telling you that, you've got very low volume here. You've got, almost extreme highs. This was back in February 7th. So up in this area. And now we're talking about this area up over here. And really, I'll just spread this out. And you can see that we're talking about very low volume, upward price rotation. This is kind of showing us that we're in that very weak price trending area, and the low volume to me indicates that we're not getting a very large um, momentum follow through. So the current pattern for today is a gap reversal in counter trend mode. A gap reversal in counter trend mode would typically invert the pattern, meaning that in this particular case, I would be looking for a a gap typically to the upside and a reversal back to the downside. That's what I'd be looking at today if it were in a not in a trending mode. Because we're in a moderately upward trending mode, a counter trend gap reversal kind of highlights the fact that we could get a gap lower, don't know exactly where, and maybe a little bit of upward trending. So be aware today that, I'd like to be able to tell you because I think this market is still breaking downward. But I'd like to be able to tell you that, we're going to get a big breakdown today. I don't see it happening. And I don't see it happening tomorrow unless some sort of a news event hits. And now let's come over and take a look at what we have for news. Of course, news can be can be Okay, so mortgage applications have collapsed. That just happened literally about 15 minutes ago. Mortgage applications collapse. That's a big negative number week over week. Let's see if we've had any. And we knew the housing market was soft, but if you follow my extended research, I talk about how the housing market has just completely flattened out. You can't see it here. I'll show you, but this is concerning, but not enough, in my opinion, to drive the market. We have the Red Book, we have GDP coming out today, bond auction, FOMC minutes. That's after the market or 2 o'clock. It looks like Eastern time, just before the markets close. And we have crude oil, and then Fed Governor Jefferson speaks. So not a lot of news today. And again, the mortgage purchase is the housing market. Now, I was going to let me see if I've got them here. I think it's here. Yeah, it's here. So my housing market data. This is my housing market data. My custom research. I built this little dynamic system for tracking the data. The data comes in as raw data. This is what we get from realtor.com. And then I built this little modeling system. And as you can see, if I zoom in here, the data over the last year, we've seen this big post COVID kind of a rally up. This is in price reduction count. Price reductions were minimal, they didn't happen. And then come 2022, when the Fed started raising rates, price reductions really shot up. That's this bright yellow line. Then they flattened back out here in 2023. They shot back up a little bit. And you can see over here, it's been up, down, up, down, up, down, up, down. It's really been very flat. Median days on market has flattened out and gotten shorter. Actual median listing price has stayed extremely flat. Active listing counts has flattened out, still to the plus side. So we have an excess number of inventory here. Price reduction counts have flatlined as well. And as you can see, when we go into my modeled market demand, the real pricing factor is negative by just zero point 0.3, very flat. And the model market demand is negative zero point 0.8, very, very flat. Okay, just pretty much going nowhere. Now, when we get into the dynamics of the market, real estate price trends are moving downward. So, and that's incorrect, obviously. That should be 2625. I'll fix that. So anyway, we're moving downward in price trending. We're moving upward slightly in price reduction count. Active listing counts are slowly starting to inch higher. Obviously, I think this is going to increase with the layoffs in the government and elsewhere. Because remember, government contracts a lot of private industry. And then, of course, we have the new listing count. So you see new listing counts up 27%, new count change of minus 0.62, and then new share of market is 0.34. So you've got a big bump in the total of new listing counts, meaning we're getting more homes on the market. You can see it right here. But it's not really changing the total dynamics of the market much. And again, because real estate is still an active driver of the economy, if real estate starts to break, like we learned in the global financial crisis, it could have compounding impacts on the actual markets, the stock market. Now, overall, like I told you guys, I'm still kind of playing out here with these are my custom index charts. And these are what I use to help gauge the market. So the couple of things playing out here. Last week I talked about this. We had the smart cash. Let me find it. And should be metals. Smart cash. Well, we can show you this. So last week, the big move in the market happened to be overseas. Okay, what the rally we saw last week was mostly foreign capital moving into safe havens in preparation for uncertainty. And it's a very evident that we saw this move here. Now, part of that move into safety was a move into US data, US assets. So let me try to find the smart gold index. It's got to be back here. Cash flow. Here's a good example of a leading index. So the leading index here was a bit higher as well. So this is telling you that money is pouring back into the US markets trying to avoid global risk. And what we're also seeing here is the volatility index, which is a measurement of kind of overbought, oversold trending, had moved up to 2272. That's pretty high. Typically up in this area, we're in fairly strong bullish trending kind of topping scenario. The fear index had moved to 7.57, which had, was moderately high. This is the first stage of contraction. You can see when we get up into this contraction area here, we're typically moving into topping. Contraction or warning here, you can see we're in a deep pullback. And of course, you can see here 2022, the fear index moved up considerably. We rolled into this downtrend. Am I saying we're rolling into a massive downtrend? No. What I'm telling you is that since back over here, essentially before the election, this is weekly, you can see right back over here around the election that we start to get into this very prior to the election, we start to get into this very solid rotation, which is setting the fear index off, and the sentiment index is rolling slightly downward. So again, if we were to break down this week and move downward, this would be a fairly solid rollover kind of a topping pattern. We have there's the leading index. So again, we went through this, the leading index slightly higher. I think this is capital moving from foreign markets into safety. I think it's a very aggressive, what I call capital shift taking place. To me, this means that capital is actively seeking safety and security, not technically investment ROI. The accumulation phase index has moved into bullish trending slightly. I mean, you can see this little tiny red bar here. This is February. These previous bars here were bearish. So understand that as we moved up into this area, this gave me a pretty good warning that, we were moving into kind of a topping formation. We still have about a week and a half to go in February, and this could change. This could turn back into green, indicating bearish trending. This is not very bullish, in my opinion. This is just moderate, sideways bullish trending. The innovation index is pulling back, building a nice little base. I think this is a good solid rally setting up. This is probably where a lot of money is going to be pouring into. Then we have the cycle phase index, very, very weak. This is a devaluation cycle phase. Markets are just not appreciating. They are just, devaluing right now. So until we get any real appreciation, you're not going to see any big growth. And that's the metals index. So we'll come over here. Market ratio index, very weak. This is a monthly measurement of market trend and appreciation. You can see here, COVID, we had the breakdown, then we had the huge appreciation rally into that weakening trend in here. Now, understand this was early middle of 2021. We start to weaken into this trend. So it's early, typically fairly early. Then we move down here into these lows into 2022 end of 2023, we based bottom. We had a couple of big rallies into the election and prior to the election, and then we've been rolling back downward. I really think we're looking at a basing, bottoming, setting up back over in this area, kind of near these lows. Easiest way I can explain that here is to draw and tell you that if we do get a breakdown, this is what we're looking at. Come on, computer. There we go. So if we do get a breakdown, I think we're going to be moving down into this area on the lows. So maybe moving down, consolidating, and back up. That would be a fairly clear breakdown, in my opinion. And it would be in line with kind of the rolling price pattern that I've been talking to you about for the past couple of weeks. Okay. And then lastly, we come over to that is not it here, the SPY Smart Money Index. And I've highlighted again how this is a, hopefully the editor pops in here quicker. This is what is basically driving my current expectation that we are at or near a top. Okay. This move breaking up into this area here, just like we did here, indicates to me that we could be at a rollover period, rolling into a downward cycle trend. It all depends on what happens over these next couple of bars. So again, we've got the peak, then I call it the secondary bar, and then this would be 2, 3, 4. So we have 2, 3, 1, 2, 3, 4. So here's our breakdown. We haven't broken down. This is where we got the breakdown right here. We haven't broken down yet. Okay. We haven't gotten down into these lows. And we got to see what happens when we get down into these lows. If we get into these lows, if we come back up here and reach another peak, we could set up a secondary top type of formation here before we begin to get lower. If we break down into these lows, then I am going to be looking for a more defined breakdown mode setting up coming forward. But this warns me that we're at a top. This tells me that look out, guys, we're rolling into a topping formation. And then lastly, we have the the base trend index, which is telling me that the dollar is still in moderately high demand, but has weakened considerably. So this pretty much rolls us into US dollar dominance and demand. You can see that we've rolled up through this cycle and then broke down, consolidated, consolidated. Now, this, while the dollar has gotten up into 108, 109 area, what's happening is we've moved through the election, through some devaluation of the general market, not expecting great growth and trending. Otherwise, we would have seen very strong US dollar continuation. But at this particular point, the US dollar is consolidating downward and is still in very good demand, in my opinion. But this is rolling down into kind of a moderate sideways downtrend. Again, I'm kind of expecting a bit of a rolling sideways setup, not really a big crash like some are saying. I'm expecting more of like a rolling sideways setup. I think this is more logical than a big crash right now. So we come back over here. I wanted to show you some of these things. Yeah, let me see if I can get out of this. Come back here. So what I'm looking for right now is, rejection. I don't want to spend too much time on everything here, but what I'm looking for here is rejection. If we get this, get rid of that, get rid of that. Didn't realize I was in draw mode. What I'm looking for here is, again, get rid of this, and I would be looking for rejection. If we're going to get the gap, it looks like it's going to gap maybe a little lower. So we'll see. But if we get that gap and it is in a counter trend mode, I would be looking for rejection, potentially to the downside. And I would be looking, if we got any upside movement, I would be looking at that 61150 area. Remember this area here? Very, very important that we see price stay off of or below this level if my sideways rejection is going to come to any fruition. Otherwise, like I've already told you guys, technically we are bullish. I think I've shown it to you. I can't remember which chart. That's my main chart. I'll show it to you again if you need to see it. But so let me get rid of this, and get rid of this. So because we've been able to rally above these highs, this high, for example, and this high, for example, right over here. And you can see this high, for example. And of course, you can see this rally here got above this high. So understand, guys, based on Fibonacci price theory, which I teach you to try to teach you to use, the current trend is bullish. Has been bullish. In fact, here's my marker of it from the daily chart and from the longer term chart. So understand that we are looking at a bullish trend right now. Undeniably, we are in an intermediate and longer term bullish trend to the upside. Where we're at is again to determine whether or not we're going to roll into this rolling sideways pattern that I expect, or whether we're going to rally up out of this like a banshee. And if we were to see a very strong market, I would expect us to rally up out of this. I don't expect that to happen personally. We've got a lot of transitioning going on. I expect that the most we're going to be able to see is some sort of a rolling sideways pattern like I've drawn here in blue. I don't see, there was just a comment, like I said, the real estate market, mortgage applications are down 6%. Why do you think? Okay. Mortgage applications fall and they go up and down week after week. Granted, we've had a very slow, cold, wet week throughout the US. Maybe it's related to the polar vortex that's hitting everywhere. But again, I am under the belief that we are going to move more into consolidation through May, June, July, possibly, and then roll out of it maybe towards the end of the year, maybe very late this year. So, if I were to come and show you, I've kind of drawn it here, but if I were to show you where I think we're headed, I think we're pretty much staying in this window. I think we're looking at, that 550, 560 area as a low, maybe in this area as a low. I think that generally we're going to stay in this area. In other words, this is pretty much where the price is going to be trapped, somewhere around the 570 to call it 550 or 615. And I believe that we're going to set an eventual low somewhere around the middle of July, maybe end of July, and start to rally back out of it. And this is my long-term expectation, is to look for this low and this low to try to buy into the market. So these are going to be my buy zones. Set those up a little darker. And then ideally, what I'm going to want to do, folks, is I'm going to want to try to catch this move up on out. So basically buying in here and trying to buy in here and trying to avoid the rotation here. A lot of people have come out and they've been hollering crash, crash, crash. I just saw uh somebody sent me a link yesterday of one of the guys I follow yelling, buy, 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 tell your mother-in-law, buy. And I'm very cautious of chasing this upward right now. Given what I know, with the uncertainty and the fact that the dust has got to settle, I mean, look at it this way: we're at the 19th. We haven't even seen the first 30 days of Trump in office. So I think we have a lot more dust to settle before we're going to get out of this. But anyway, I've gotten a little sidetracked today, so now we're going to go back and try to catch up with the QQQ. QQQ again rolled into some sideways trending. You can see we got just above this area here. This is where I would be looking for that rejection again. So remember, I would really be cautious of downward rejection here. When you get above it, I mean, technically we're bullish again, guys. I want you to be aware of that. But when we come up and we hit this kind of a double topping formation, uh, we're really looking at kind of a rollover. Okay. We're looking at This is more of a double top than a breakaway right now. We could still break away to the upside. We are still technically bullish. We could get up a little higher. But again, if I were to look at this, I would probably need to get a close above, say, 542, maybe 542 and a half, and to say 542 and a half to get into a real bullish trend. Because until we get, I mean, just touching this level and pausing on very moderate volume doesn't do it for me. It doesn't tell me that we're in a breakaway trend. Yeah, technically we're bullish. Yeah, we've just touched this level. Yeah, this is a technical double top. Yeah, we're still in this excess price excess phase peak pattern. And yeah, we could roll over or we could break away. So I'm very cautious right now to see how this plays out and to really see if we do get any breakdown. And we would be targeting basically this level or this level on the way down. Those are the two major levels for us right now. On a breakdown. On a breakout to the upside, I mean, we'd have to look at Fibonacci to see where the next major target is. And we could easily do that by simply coming here and taking a look at Fibonacci extension from this rejection to this rejection down to here. And our first target would be right here, 565.28. And our second target would be up here in this 596 point, call it 55. Now, that's a deeper rally phase, okay? If we were to come to this moderate rally phase off of these lows, we are looking at, we've already hit the 618 area, and our next target would be 549.87. I'll just call it 85. And what I'm looking at, guys, is I'm looking at this nine, whoops, this 9165. Okay. It's a number, it's a fib number that a lot of people don't know. Yeah, you can call it one, but it's just a fairly common number for an easier target than just getting to one. So, you're looking at these as an upward target based on this Fibonacci rally phase, and we'll see how it plays out. I just don't think we're going to get a lot of rally here. So gold and silver, waiting for it to load. Back up near highs here, 29.58, 29.60. Silver's at 34.50. We're really looking at a good solid rally here for metals. But I will warn you that if we do get into a breakout, if we do move into some sort of a collapse, a market collapse, we could see a panic mode in gold and silver. I've talked about this before. Get rid of some of these. I'm going to just tell you right now that if we do get a breakdown, we could see a panic. So I want you to be aware that gold and silver will likely stay in a bullish trend generally. But if we get a big breakdown in the market, gold and silver can have very strong panic type of moves to the downside. So I want you to be aware that, this is kind of like um, gold and silver are pretty much like a rocket ship right now. Gold wants to go up to 43, 4,400 as quickly as possible, probably in the next 30, 60, 90 days. Silver probably wants to get up into that 42 to 44 area, probably within the next 60, 90 days. And it's going to be like a rocket ship. But I'm going to tell you that if the markets do enter into, panic breakdowns because of market news, then be aware that you could see, and I'll get rid of these so I can show you. And remember, watch some of my other gold and silver videos because, um, it's very clear what's going on, in my opinion. And I've been calling this for a long time about gold and silver just taking off. In fact, I probably have data over here. Yeah, there it is. There it is. That's the gold and silver liftoff. So you can see that you've got basically between now and like May, June, we're gonna be up another 1,500 bucks almost immediately. But if we get breakdowns in the market, you could look at, fairly solid, 1.5, 2% breakdowns in gold. And that's going to be associated with a panic move to the downside in the SPY and the QQQ. Otherwise, like I said, guys, we're moving very solidly to the upside. And silver, you can already see I've got the $44 level targeted up over here. So, what we're looking at is the same type of a rally. We're pretty much going to rally on up, consolidate a bit, and then rally on up into this area. Same type of setup right over here. And this consolidation, this March consolidation, I didn't draw it quite into March. Let me redraw it again into March. So we come up here into March, consolidate, and then rally on up. That's kind of the area that I expect we're going to get the next big pullback in the market. We've got this week and next week as a potential pullback in the market at end of this week, because we're on Wednesday right now, and into early next week, and then potentially into March 21st, 22nd, 23rd. Okay, lastly, let's go over here to Bitcoin, and Bitcoin is up 782 bucks. There's our daily chart. Wow, I don't have anything drawn here. Okay, beautiful. Let's start over. So you can see these lows, you can see these rejections, very clear low price levels right here. Love to start off again. We've got our high price levels right up here. The reason why I don't count these big breakdowns here and here is because these are isolated. So these are what I call rejection point, rejection point, rejection point, low, 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 high, rejection point. You can see we've got this great big rally moving up. You can see we've come up to this peak, come down to here, moved into this kind of excess phase peak pattern. Then we've got secondary excess phase peak patterns coming up here, rolling into this channel. So I will make that kind of red and red. So now understand, folks, that we've got this secondary high, which is rejection. This now becomes our new quote unquote ultimate high level here. I'll shrink this back down to 2. And what we're looking at here is we've got our breakdown into consolidation. So we've moved from this kind of a red pattern into this consolidation, which eventually will try to break down into an ultimate low. So here would be our ultimate low, roughly off the excess phase peak pattern. And because we've got this low back here, setting up the blue level would, if we get this breakdown, would break below this level into consolidation and then move to an ultimate low here. And that would be our blue setup. So the way these excess phase peak patterns work is they essentially stack. This is the breakdown into consolidation, moving to our ultimate low, which this ultimate low will start the consolidation, if it happens, of the blue level, and then it'll break down to an ultimate low down here. So we're very cautious right now of a potential breakdown. And where we're at with this move, this pullback here with this consolidation could reject to the upside, could reject to the upside here. And if we did reject to the upside, we would then, again, folks, because we have this peak coming down to this low and moving up to the upside, we would set up another excess phase peak pattern, which would be very similar to this previous one. This can happen where you just stack them up And what would end up happening here is we would either continue to break out to the upside, or we would roll back down towards this low, breaking down into consolidation, and then maybe breaking down to an ultimate low. So you can see how we're very well trapped in this sideways momentum, and we're losing real strength here. We're losing volume every day. Another technique here, guys, that you can use is every day price doesn't do what you expect it to do. It becomes lesser and lesser. It becomes a lesser likelihood that we're going to see price do what you need, what you expect it to do. So the longer we stay in this consolidation without a breakdown, the less likely we're going to see this potential breakdown. It could still happen, but ideally we are consolidating. We are breaking downward. We have no real strong upward trending yet. But again, the more we stay in this consolidation, like the more we stay in this excess phase peak pattern without a big breakdown, the more likely we're going to try to see some sort of an upward reversion or cancellation or invalidation of this trend. We are just, like I said, kind of trapped right here, moving downward. And I think personally, I think if we do get a breakdown in Bitcoin like this, consolidating maybe down into this level, I think that's going to be enough to send the markets, the US markets, into a collapsing mode. So watch metals, watch Bitcoin, pay attention to what's happening with the global markets. We're really in a kind of a fragile market environment. Is the Fed capable of addressing it? Yeah, I think if it's a moderate consolidated sideways trend, I don't think the Fed's going to have too much trouble with it. If it's a global collapse, so then it's another story. But I don't see it being a global collapse right now. So we got to just kind of see what's going to happen. I'll go back here to the SPY. We are 610.18. You've got my kind of play, the entire outline of what's going on over the next 5 or 6 months right here. And then you've got what I think is going to happen immediately right in this area. I think we're going to roll back down into this area. I still believe that this is a very difficult market for a big rally. I really think that it's a very difficult market for a big rally. So be prepared for a bit of a pullback, in my opinion. Okay, guys, let's go get some today. Talk to you later.